Record cattle prices might not point to high profits. Market analyst Dan Bossy says soaring inputs, coupled with a sluggish U.S. economy, make risk management a vital business component.
We don't see domestic beef demand rising this year. We also worry about the price of feed and forage. It's been a very hot July and August. We think U.S. corn yields are in decline, may reach as low as 148 bushels an acre. And because of that, the price of corn and feed is going to remain very elevated. So it's this real challenge of margin, what goes in and what comes out, and how do we manage both ends.
But it's not all a sob story.
Well, we actually see quite a few bright spots, which is number one, which is the expansion of export demand. Again, U.S. beef is gaining a strong foothold again around the world market. We are especially excited about what's going into South Korea, Japan, and that Asian whole area. We see that as expanding to maybe where U.S. is exporting 12 or 13% of its beef supply in the next couple of years. That takes us above the BSE levels of 2003, and will keep cash cattle prices very high.
Bossy also says typically high corn prices hurt the feeder cattle market, but smaller numbers indicate it will stay between $125 to $140 per hundredweight.
We also can't allow the cattle market to liquidate. By that I mean that as corn prices stay high and margins suffer, that to some degree the cattle and beef markets will try to keep at a high price level, thus that we don't liquidate any more of the herd.
Of course, for some, it's not a choice. The Southern Plains drought is rapidly accelerating the sell-off of an already dwindling cow herd.
Yeah, that's the million-dollar question we think for the cattle industry for the remainder of this year in 2012 is, will the plains drought continue? La Nina appears to be coming back. There's this correlative, if you will, between the cooling of the equatorial waters and dryness in the southern plains. If that drought were to expand in 2012, we have issues with the new wheat crop. That means less pasture availability, higher forage costs, high grain prices, also probably an expansion and liquidation of the cow herd. In fact, could we get cow numbers to a low enough level that would, of course, send beef prices up to $2 on a live basis sometime by 2013 and 14?
That all depends on moisture. Regardless of how high beef prices get, there's no doubt consumers are paying more for it than any other protein. Bossy notes, as unemployment has risen, so has chicken consumption. The struggling economy has driven domestic beef demand down since 2007.
Yeah, we want quality to be maintained at a very high level in beef, because if we're going to have these elevated beef pricing, we need to make sure that the consumer is rewarded with that consumption.
Bossy was one of several speakers at the recent Feeding Quality Forum in Omaha, Nebraska, and in Garden City, Kansas. The events were sponsored by Pfizer Animal Health, Purina Land O'Lakes, Feedlot Magazine, and Certified Angus Beef.